Goodness, what an incredible group. First panel in the morning, a fantastic showing. I'm really excited to be here to talk about the most important issue that I think is going to be discussed this entire week of a consensus and all these amazing events, which is about convergence of a lot of really important strategic technologies. I've already run into people at the coffee station talking about their work in cybersecurity and blockchain and quantum and AI. And that's what we're here to talk about, is this future of agentic commerce and the convergence of these really amazing transformational technologies, the threat pictures, as well as the economic opportunities that get presented from all of them. And that's why we're here to talk about the trillion-dollar question. What does the future framework look like for the future of agentic commerce? And the agentic economy is coming, whether we like it or not, whether we want it or not. The future is dozens of agents per people, potentially more agents trading than humans that are engaging online. This is not just a technology story. This is a massive economic shift, maybe tectonic shift. See what I did there? Tectonic shift to talk about how value moves, who captures it, debates and fights over standards, competition over what are the rails that we're going to build the future ecosystem on, and looking at how we're going to address existing and legacy internet, existing monetization systems like subscriptions and ads and checkout flows that really weren't built for this moment, and figuring out how we can move beyond that and into a more user-centric and creator economy. So new product architectures are starting to fill some of these gaps, right? Interoperability is also a foundational question amongst many of these builders, and real questions come up related to security and what is necessary in order to allow for transacting with each other across all of these different ecosystems, so that we don't just build in silos and reinforce long existing fragmentation. Standards wars can also have winners and losers. A lot of players, including we have a big Web 2 player, Cloudflare, joining us. I think what's going to happen over the next 12 to 18 months is going to hugely shape what the future looks like in the agentic economy ecosystem. And then there's a lot of economic questions that we have to ask, too, about how is value accruing and who is controlling it? Is it happening at the chain layer, the protocol layer, infrastructure, merchants? And how is that mixing with bearer instruments that are now being traded 24/7 with instant settlement? What does that do for economic opportunity, stability, and risk? So huge amounts of discussions around what the implications are for consumers, for markets, for infrastructure, and that's why I have this amazing set of panelists that are joining me. We have Lohe, who is joining us from Kite. We've got Stefano from Virtuals Protocol, Erik Reppel, from Coinbase, and then I mentioned our Web 2 participant, which is Rohin, Lohe. So I really want to set the stage for this discussion around something that I was very excited about. During my tours of the White House, standards were really important. So I'm starting with Cloudflare and talking about X402. So Cloudflare, you're in a unique position. You support X402 and MPP and your Agents SDK. You're partnered with Visa and MasterCard on authentication, and you're the infrastructure that's sitting at the heart of much of the internet that a lot of these builders are building on top of. I'm so excited to see a Web 2 player playing in Web 3. Can you share a bit about Cloudflare's view on neutrality, on your multi-vector approach, on you participating in a bunch of different parts of the ecosystem? And then I'm going to move on to Coinbase, your other partner on the X402 standard.
Yeah, last May when we saw X402 come out, we were really excited. The proposition of X402 was so exciting to see payments move into the network layer. And I think as Cloudflare, at the time, we jumped right on board. We were like, this is a really exciting protocol. We want to accelerate the protocol, see where we can take it. And then I think a few months later, MPP, the Machine Payments Protocol, launched. And fundamentally, I think they're going after the same end goal of helping machines transact with other machines. And I think competition is good for the ecosystem here. They're pushing each other, and as Cloudflare, I don't think we're in the business of deciding winners of a protocol. That's not healthy for the internet, that's not healthy for the ecosystem, but instead we're here to help drive further innovation, and we believe that the protocol that ends up serving clients best, that moves fastest, that's probably the most open, is the one that's going to end up winning. I think overall as a space, like what we are so excited about is like really not thinking of the payment rail as a separate rail, but thinking about how the payment rail converges with the request path itself.
Yeah, that really tees it beautifully to Coinbase's work. So you guys are a co-founder of X402 and have been doing some incredible work, but you've got a lot of competition and parts of other ecosystems that are growing that Cloudflare is a part of, but also others are building on. What are your thoughts? How are we replaying early internet fragmentation? What does winning look like in the standards contest? Talk to us about your participation in 402 and how you view lots of different players working in the system.
Yeah, so where to begin? It's a big question. I think that I agree with Rohin. Like broadly, like competition is good, and the place that we're at is that there's actually only 2 of these that have like meaningful mindshare, X402 and MPP, which is like not the bet I would have made a year ago when I created X402. X402 actually I think today turns 1 year old, so it's yeah, it's been a happy birthday. I think that there's kind of this view of, my view on standards is like, standards are entirely a value creation game, not a value capture game. And that the reason why the internet was good is that the standards are fully open and they capture no value, right? HTTP doesn't inherently capture any value. It creates a ton of value, but it captures none. And what it enables is a level playing field for competition where companies can then compete to provide the best services. Like why did Google win and become $1 trillion company is because ultimately they had better search results than Yahoo or Ask Jeeves or any other competitor from the time, right? And that is kind of like the playing field we want to set up with X402 is truly be like as open, as neutral, and as unbiased as possible, and then let everyone just kind of run in competition. And I think that that's like, ultimately that is the right goal and right North Star for anyone who's thinking about building a standard is, if that is the goal, it actually doesn't matter what wins, as long as everyone's aligned on like that being the goal. On the flip side of standards, like the standard for what an iOS app is like, you know, pretty well declared. Like there's a standard format in which you distribute apps on iOS, but you can only run them on Apple devices, right? Mm-hmm. And so there are, people kind of conflate like
some of the lock-in issues, yeah.
Exactly, yeah, and that's like a very different world than the world where like anyone can go in and interpret that standard and, you know, build on it neutrally. And so this is like that North Star of, you know, creating value and capturing it, I think is just so important at this phase of the life cycle.
Yeah, I really appreciate that. Like, that was very well distilled about the comparison to HTTPS on not capturing value, but enabling it and facilitating it, being a market opener. I really like that comparison. Then Lohe, actually, I really want to turn to you. You guys are creating and building amazing capabilities, focusing on like at the chain layer, like, to what extent do you feel that agentic commerce breaks old infrastructure versus needs new infrastructure? And this tees up a bigger question that I'm going to ask the whole panel. To what extent do we really need new infrastructure, specifically crypto, for agentic commerce? But Lohe, you first on what you guys are doing and to what extent that you feel that the future of an agentic economy needs new infrastructure and breaks the old.
Yeah, that's a great question. So Kite, first of all, for people who don't know, we're building a vertically integrated blockchain for AI agent native transactions. So first is the settlement layer. We've basically focused on things that agents need. So gas abstraction, fast lanes, which means that if there's congestion, agents can basically transact at machine speed. The second is identity and wallet infrastructure for identity and governance for agents on chain. And the third layer is basically agent discoverability and skill. So to your question about why did we do that, what is the current infrastructure that is agent native transactions would break? So there's a few things. One is identity. For agents, basically, they can't have like KYC or a lot of the human verifications. And especially if you look at transactions today, a lot of it is agent to agent. And so, you basically need agents to have a lot of cryptographic identity on chain, as well as transactions need to be tracked on chain as well. And also, in terms of transactions, you need, very fast speed. A lot of the time for many of the transactions, it's basically like agents paying for API calls, which are often cents on the dollar, and so you need a infrastructure that can basically handle micropayments at scale, and as well as governance. Basically, you need different ways for agents to really have a lot of those guardrails to have like spending limits that you authorize it for completing the actions that you wanted to.
Yeah, I love that, and you've really highlighted some of the values here, and I'm curious, and I know that this is sort of a question that's open to the group, but do want to start with Stefano if you have any thoughts there on like hot takes, which I know you like, exclusively hot takes.
Spicy takes.
Yes, on like, do you need crypto based on like a lot of the positives that you get from crypto here? I know, and I've seen where Web 2 and AI players who had traditionally ignored cryptocurrency in most of like the context that I was in with them have now started to play and lean into it because nothing else has really evolved access to financial instruments for 24/7 trading and instant settlement, and which doesn't mean that that's inevitable to be the future forever, but basically the current state of what's available. That's why I'm seeing people that had traditionally ignored the crypto space now playing in it. But what are your thoughts, Stefano?
So as a former consultant, I'll say it depends. But
the regulator's Heisman too, yeah.
I'll also do like a very short intro. So for those who don't know virtuals, we're building an on-chain capital formation and coordination layer for autonomous economic actors, both digital as well as physical. Now, I think when a lot of people think about, do we need crypto for agentic commerce? Most people are thinking about payments only, and that's where the answer of it depends comes in, because I think, when we started building what we're building, and one of our products is called Economy OS, and it's kind of a full stack of tools for agents to be able to do, business with other agents or business with humans, right? And so, we were one of the first ones to adopt X402. We're actually one of the biggest facilitators on X402. But I think on the payment side, there's many ways to go about it, right? You can do X402, you can do MPP, you can do, basically off-chain transactions and just batch them, regularly. There's a lot of different ways. But there's other parts of the stack where blockchain comes in, where I think it's really important, which is, Lele touched a little bit on that, which is around, identity, trust, verifiability, right? And one of the things that we adopted as part of what we've been building was ERC 8004, which is a standard where you are actually, building this like trust and reputation layer and kind of like history for every agent that's out there.
I love the way that you frame that. The need for like really investing in the trust tech infrastructure and architecture being the true economic unlock here, and especially now that we've let TradFi. I don't know how many TradFi folks are in the audience that are now dealing in DeFi. I see some hands. They're all about wanting to lean in on that trust tech, like on that trustworthiness index, and trying to make that be like their major value add to regulators and to consumers. So what about you guys? Any other hot takes on do you need crypto for this moment? And any reactions to Stefano's talk about the need for trust, authentication, identity in the ecosystem, like what's needed there, something that parts of DeFi we know have struggled with for a while?
Yeah, I think that, I would agree that it depends. Is how I'd say. I think there's pros and cons to crypto for different transaction kinds. In that, like, one of the things that crypto has not yet done a good job of solving is consumer protections and chargebacks. And there's still, if you're making a $1,000 purchase, you probably want to put it on a credit card in a lot of cases. Like if you're booking a flight or you're booking your vacation, like that works pretty well. I think what people miss is that stablecoins, one, enable a type of transaction that's just not possible in like a credit card world, and then two, stablecoins have just immense benefit to working capital requirements and settlements, and a bunch of like business-oriented actions, but they also invert the risk model, which is like, why do you need trust for financial institutions? Like most financial institutions, they're all about trust because A, it's like it's very like, it sounds good, but B, with more traditional payment rails, they're very reversible. And so as a business, like if you talk to any like small, medium business, like their third highest expense is chargebacks, and like having to deal with people basically buying something from them and then charging back on their credit card and then basically getting the product for free. And the thing I say about stablecoins all the time is stablecoins support refunds, not chargebacks. And so that removes an entire aspect of kind of the risk curve that you need to think about as a business, because now you're not going to have that fraud vector. And so it kind of reduces the amount of information you actually need to know about a person, because a lot of information that's gathered is actually gathered in the name of risk, not in the name of like a legal obligation. And you see this in the real world all the time where like you don't KYC someone who hands you a $10 bill to buy a sandwich at a corner store, right? Stablecoins are like digital cash more than anything else.
Yeah, and maybe to add to that, like it's like we view the future as multimodal. It's like for the right transaction, you pick the right tool. And so why do you pick a stablecoin? Well, it's extremely fast, it's pretty cheap, and it has the potential to scale to millions of transactions per second, potential. And so like Cloudflare today operates at consistently over 100 million requests per second. We're issuing more than 1 billion 402s a day. What rail that exists today, and most of these 402s are for relatively small sums of money, like what rail exists today that can scale to such a profile, right? And so that's actually where we're really interested in exploring how blockchains might be able to scale to meet this new type of demand, even beyond what we've dreamt of so far.
Yeah, and I appreciate that point. And looking at blockchain innovation, maybe not like also as a catalyst for other sorts of experimentations, because no other rails have provided this alternative option. Blockchain may win, it may not, but that ultimately now we have an ecosystem where there's a lot more experimentation that's coming, and there's a lot of interest that's been unlocked by more traditional players. I really do want to dig in on this issue and what I feel was a pretty hot take about stablecoins producing less of a concern around fraud and the issue of recoverability. It's a really important topic, and it's one that's at the heart of gaining that trust from consumers, from institutions, for broader adoption, something that all of these ecosystems and many of the builders out here I know are trying to drive at. In a lot of ways, this is also potentially unlocking a huge financial attack surface, right? Like if we're just automating things that we've already been struggling at implementing accountability and security into, we know we face that because we had the largest heist in history. We have tons of fraud and ransomware payments and lots of stuff that's going through crypto. Lots of potential goodness that can come from recoverability. Yet still, even with those goods of public traceability, we're still not wrapping our arms around a lot of these problems yet. And so the issue of compliance comes to bear here. A lot of benefits that can come from public traceability of ledgers, the challenges with AI on automation and black boxes on explainability. I'm just curious, like all of you guys thinking about looking at the architecture of an agentic economy, are our authentication and authorization systems up to par to deal with this moment? What is not adequate, and what do we do to shape the policy framework or build to it? So, Lohe, Stefano, thoughts first?
Yeah, on our side, I think a few of the key things we've been thinking about is how do you have that traceability between me as a human user and my agent actually transacting for me? And so we've launched what's called a Kite Agent Passport. And when you basically say, oh, buy me a snack from a major merchant, or research for me some of the top apartments in SF and automatically send emails to listings for me, basically all of these cost money. And so what we've done is built a passport, or it's a session where you can basically you set certain amounts that you want to spend, as well as the time for executing that transaction. but the human basically can go in and hit the kill switch if that isn't exactly what you wanted to do, or something goes wrong. But I agree. I think to what Erik said. There's a few things like stable coins can be hugely helpful because in many cases, a lot of what you might be doing is like different research, which costs cents on the dollar. And if you string a lot together through traditional payment rails, there's still that 3% checkout fee, which over time, if you have a lot of these, like transactions, just commercially doesn't really make sense. But on the flip side, to really let agentic payments or agentic transactions scale, you do need to really think about, how do I return my goods? Who's accountable? How do I resolve disputes for
a big one for commercial?
Yeah, exactly.
Yeah, I love that. And then Stefano, your thoughts. I know you guys play obviously hugely in the authorization and authentication space.
Well, I think what's the interesting context to this is that a lot of the builders on our platform, they're fantastic builders. They're just out there thinking like, okay, how does AI enable us to build these really cool products? And I think now we're starting to catch up to like, okay, now we need to think about all this risk, all this compliance, all these kind of things. I think one thought is that I don't think we have a standard for any of this yet, but a lot of people are working on it, right? And so, for us, the way that our protocol works is that you have a couple of modules there that aim to address some of these issues, right? Because traceability is fantastic, we fully believe in that, but ideally you want to be able to address these risks before there's like an exploit or an agent misbehaves or whatever, right? And so we have something like escrow, for which smart contracts are fantastic, right? We have also the roles of evaluators that can basically look at jobs and make sure that, okay, this was done the way it was supposed to be done. The trade-off is also, or it always comes down to, speed versus security, right? Like, are you going to have to evaluate every single job? Because then it's almost like, well, it defeats the purpose of having agents, because you're probably, faster if you do it yourself, right? And so we're trying to think about how do we actually create something that strikes the right balance between okay, this is compliance, the level of risk is, let's call it not zero, but acceptable. But at the same time, the product is significantly better than whatever we have, out there today. And for us, one of the big, pushes that we're doing now is actually open sourcing that protocol that has all these kind of elements, so that we can actually work together with other people in the industry to make it better. Make it better for everyone, and also make it standard, so that we actually get to a point where we all agree, okay, what is the standard for these things to actually work at scale, with compliance, with acceptable levels of risk.
Yeah, well, and speaking of standards, Erik, to tell us more about your views about what currently works and doesn't in compliance and security frameworks, what's needed to meet this moment, but then also for all the naysayers and the doubters and the people that would say, well, wouldn't you trust Visa or MasterCard more than crypto? What do you think helps to unlock that trustworthiness index with those consumers to help build that interest in experimentation?
Yeah, so I think one of the major differences, one of the I think most important technical decisions with X402 was to introduce this optional concept of a facilitator. And so what the facilitator is it's an optional service you can call to that basically can do stuff in the flow of a transaction. And so if you use CDP's facilitator, we actually do KYT and OFAC sanction screening and a bunch of other security checks in line, and so you're not receiving payment from a sanctioned actor, or you're performing KYT basically on every transaction and where you're getting paid, and that's kind of roughly the legal baseline of things you have to do. And so as a business, it kind of depends on which side of the market you're on, right? As a business, the transaction's not reversible, and so you should feel pretty comfortable accepting, USDC or some other stable coin. If you've done the appropriate KYT or OFAC sanction screening, you're not getting payment from a sanctioned entity or someone who's on a naughty list somewhere. And so a lot of the trust model actually inverts to the consumer, where the consumer needs to trust that the person they're paying is going to deliver the good or service that they're paying for. And
I like that. You're highlighting where the layers of where trust kind of, where it looks different.
Right, and this is the as I was saying earlier, this is the inversion of how credit cards work, with credit cards, the merchant ultimately is trusting that the consumer is not going to do a chargeback, right? Because a lot of chargebacks are fraudulent chargebacks. Like if you talk to any payments business, a huge amount of their business comes down to, do you have good risk systems in place to be able to flag potential chargebacks? And so with that inversion, like you need to understand the reputation of the person you're buying from to a much higher degree. And so I'm actually one of the co-authors of VIP 8004, which is another standard for trust and reputation bidirectionally. And so both putting systems in place such that you can kind of leave a mutual Yelp review is how I describe it, where you can say, okay, this person was like, this merchant was like, they didn't do what they said, I'm giving them a 1-star review, avoid this merchant. And the opposite of that, like, oh, this buyer was like a pain in the ass, so they misused my product, or whatever is abuse by the definition of a merchant. And so a lot of what you want is to provide clarity, because it depends a lot on transaction size. Like, is someone really going to go through the like hassle of performing a chargeback on a 2-cent transaction? Right? Like, to some degree, like, you'd probably pick, it's a trade-off, as Stefano said, you'd probably pick speed and throughput for small value transactions over refundability. And we want to make that more expressible over time as like an opt-in spectrum that you can have. And this is why X402 is adding things like auth and capture and refunds. And you can solve all these things at the technical level over time. But I think that people really underestimate how much trust is already baked into the native internet. Like if you go and buy something from Amazon.com, you're pretty confident a box is going to show up at your door. Not because like you have escrowed refund guarantees and everything, but that like they're a reputable business that's been operating and delivers billions of packages. Your package is either going to arrive or they're going to make it right. And so this is kind of like this trust infrastructure. I think actually is more of it exists than people are aware of. And I think a mistake that happens in every paradigm shift is that people decide like, oh yeah, everything we've built is actually not good enough. Like everything we've built is like not relevant and we must reinvent every single part of the stack for this new paradigm. And in reality, like OAuth is actually a great system. Like OAuth is very well spec'd and it's very easy to understand how to do RBAC to give your agent very like well scoped and permissioned roles. Like HTTPS is very secure. All these things are like, you need, you want to like kind of, I don't think there's a new framework for agentic payments. I think there's incremental things that need to be added to enrich what we already have.
Yeah, and this point on legacy framework really tees up like Rohin, and like you guys are like backbone of the internet for a long time, the layer 1 to layer 1s. But like I am curious if you have any thoughts to sort of get us to closing out here on thoughts on the lessons of spending decades, in fact, operating a lot of this trust tech infrastructure and architecture, on what's missing, on where, on the layered role of compliance and security, all then building up to providing market opportunities, to enabling trust that works for consumers, for industry. Any thoughts that you have on what's needed from government or industry?
I mean, it's early and it takes all of us. And like this is, we're launching experiments. We're building by learning and learning by building. And so there are different agent trust frameworks that we're embedding in wallets. We're learning by how we on-ramp and how slowly and how we drive policies to different users. I don't think there's like a really clear answer yet that we have, or we don't have a definitive answer on how we view, how we want the guardrails to exist for agents. But I think you'll see that evolve really quickly over the coming really weeks, maybe months.
I love that comparison. Guardrails, but also a road that goes somewhere. So I love that. Well, if the audience could join me in thanking this amazing panel for their incredible insights. This was wonderful, and helping us debate and discuss the $1 trillion question of the future of agentic commerce. Come talk to us about it. Thanks.
Thank you.